Alright guys, welcome back to the channel. One of the most common questions I get asked is when's the right time to go live, but more importantly, how much do I need to live off of trading? So in this video, I'm really quickly going to go over some insights and give you some things to bear in mind when you're considering living off of a trading income and what you need to be able to get your head right and take the leap into living off of a full-time trading income. So let's get stuck into it.
All right, so the first thing you need to get your head around is the fact that a trading business is just like any other business in terms of P&L, okay? There's still going to be costs and there's still going to be profit, okay? So let's just get your head around this principle first before I talk to you about taking income, right? So let's just imagine this business here on the left. This is a widget, okay? This could be anything you like a wedding cake or a bike or a coaching program, whatever that might be. And let's just say that the cost of that thing was £1,000, okay? So we've got £1,000 or $1,000 program or product, and to produce that product, there's going to be some costs. Okay, so producing a wedding cake, you're going to have some ingredients, you're going to have some, the packaging, you're going to have some courier service and delivery, and you're going to have some decoration things that go on the top, right? And to produce it, let's just say that the cost to produce the cake is going to be this section here, right? So you're going to spend, let's just say, 50–60% of the cost on producing the cake. You might have some staff and all the rest of it, right? And then the rest of it is profit. This is what we call profit, okay? Now, when you sell this product, whether it's a coaching program or a house, that you build a house or you make a cake, each time you sell this, it's a unit cost, and you know that every one that you sell, you're going to get 60% it's going to cost you 60% to make it, and then you're going to be left with, 30 to 40% profit. Okay, pretty decent profit. So you're going to have a 30–40% net profit on that particular product. Now with trading, it's not the same. It is the same, but it's not the same in the way that most people view trading. But when you think about trading, let's just say that you've got, this is your winning trades, okay? Winning trades, and then out of that you're going to have your commissions to your broker, you're going to have a data feed, you can have any technology that you buy, you might have your charting package, you might have a subscription service of some kind, you're going to have losing trades. Okay, so let's just say you've got charting package, broker costs, you might have platform costs, you might have losing trades, and then guess what, this all then becomes overheads. Just like this, overheads. And then this is profit. Okay, now the thing that people can't get their head around with trading is it doesn't happen in a unit fashion. So we could have one losing trade, then 3 winners, then 4 losers, then 3 winners, then 1 loser, and 1 winner, and then 5 losers, right? So it doesn't come in one. You don't get the same profit. You don't get the fixed profit. This is why we always talk about anyone that tells you can earn a certain amount of profit per trade or per day. It's rubbish, because we can only think over a long period of time, okay, and focus on what the profit is over time, because we're only going to approximate this profit if we play our system out, which brings me on to the next point. Okay, so when you start trading, you're going to have a week that kind of looks like this, okay? So let's just say this is Monday, Tuesday, Wednesday, Thursday, Friday, okay? And you don't trade at the weekend, okay? What you're going to have is something that looks like this, okay? So on the Monday, you might have a winning day, right? On the Tuesday, you might have a losing day. On the Wednesday, you might have a small winning day. On Thursday, you might have nothing. And then on Friday, you might have a losing day, right? And then the following week, you could have a losing Monday, you might have a winning Tuesday, you might have a winning Friday, and then you might have a losing Thursday, and so on, right? And that's kind of how it works. And then If you was to look at that over a monthly period, so let's just say this is January, February, March, April, May, June, July, August, September, October, November, December, okay, what you might see is something like this. So if we do the same thing, this is playing out week after week, and this is going to be your monthly, and what it's going to look like is very similar. You might have a January that looks like this. You might have a February that looks like this. Then you might have a March that looks like this, okay? And then you might have April that's flat. You might had a flat April. I had a flat April last year. Then you might have a small month. Then you might have a monster month, okay? Then you might have a losing streak. You might have 2 losing streaks in a row. And then you might have a winning September, winning October, flat November, and a losing December. So with that said, your year is going to kind of look like this, right? So you're going to have, let's just say you're starting at a balance, which you fund your account with. It isn't going to be 0. And your account is going to do this, right? Hopefully it's going to do this. This is something like this. Okay, where you have ups and downs, and you move sideways for a bit, you go flat for a bit, and you actually spend more time in drawdown, okay, than you do in building new equity highs, because as soon as you've built a new equity high, you go into drawdown again. So all of this space here, this space here, this space here, this space here, here, all of this, and this is all drawdown, okay? And the only time that you're making in a winning streak is this, 2, 3, right? These little periods here. Make sense? So there's really 2 major things that you need to pay attention to before you consider trading live, because what if you was to go in and start trading live and you hit one of these drawdowns? If you want to pull a consistent amount of money out of the markets, you're going to have to work out what that is. And before you do that, I advise that you build up a 3 to 6 months living expenses buffer, okay? So whether that's what you've funded in your account, I personally keep it separate. So let's just say that you've got a buffer here that's outside of your trading account, which you keep in a separate bank account. And then what I would say is build an extra buffer in your trading account based on your performance before you take the leap into going full-time living off of your trading, okay? Because then you're allowing yourself not only to see to generate the profits and compound your account and build your account up, but you're also building another little buffer here, which then becomes your trading account buffer, okay? And you've got that to fall back on. So this will do wonders for your psychology. Okay, and then finally, when you're considering how much income to take, if you're going live full time, the beauty of doing this first is, let's just say that you trade for 12 months. What you can do from that is you can calculate the mean growth of your account, okay? And let's just say that you grow your account by 20% in that 12-month period. Well, what you can do now is you can say, well, I want to leave some in there because if I go into trading live and I go straight into a drawdown, I'm going to be panicking. So what I'm going to do is, now I know that I can do this over a 12-month period, and I know that my growth is 20%, and I know what my mean growth looks like. What I can do is half that and look to take 10% income distributed across the 12 months, okay? And I know that that will have minimal impact on my performance over time whilst continuing to grow my account. So these are things that you need to bear in mind when you're going to live off of your trading income. And this should give you an idea of, depending on what your performance is, if you half the growth of your account, you can work out what you should be at that point. And then you can calculate what you can distribute to yourself via consistent income on a monthly basis going forward after that first 12 months. And then you can review this depending on your performance, and you can tweak it each year. But I hope that makes sense. So we get a buffer in cash, We get a next buffer in our trading account based on our performance for 12 months. And then we focus on the long-term average growth of the account. We then don't want to take ideally more than 50% of the profits out each year. And then we can work backwards and know how much we can distribute on average income per month. And then we'll know how much we've got to live on. And if it's not enough, then we continue trading for a bit more. If it is enough, then you go for it. So when you lay this diagram over this diagram, we actually start living off of our trading from this point. And we've got all of this profit, all of this performance in the account, and then we can start going forward living on our trading. And with that structure, you're going to have the mindset, you're going to have the belief system that you can do it in a 12-month period. You're going to be very strong-minded. You're going to have belief in your system. You're going to understand when the drawdowns were likely to occur and how you handled that. And you're going to have the most chance of succeeding at living off of your trading account.
All right, so without going into tons and tons of detail, hopefully you got value from that. Hopefully it opened your eyes a little bit, made you think a bit differently. And now you have an objective to work towards, okay? Because these numbers are objective. I don't like working in terms of subjectivity. I like an objective focus. And now you can kind of play with the numbers, put your own ideas down, your performance, maybe based on your back testing or what you're getting right now as a trader, and then consider playing that out long term, or perhaps you're ready to take the jump. So if you like the video, give it a thumbs up, subscribe for more of this. We're going to be putting out tons of content over the coming months. So share this around if you think anyone else will get value from it. And until next time, guys, have a great rest of your day and week, and I'll see you then.